Okay, it's the 20th of March and it's a Thursday. We've got just under 30 minutes to the NY Open. So let's get to the charts. All right, let's start with the calendar. What do we have today? So in about an hour from now, just under an hour, we have unemployment claims. So that's basically 8:30 a.m. EST. So 8 a.m. EST is the NY Open, 8:30 a.m. EST is news. So it makes sense not to take any trades just before news, even though this is not an important news event. If you've been on my streams, you would have seen that I don't take trades if there is news 30 minutes after the NY Open, right? That's obvious. You should just wait. It's good sense just to wait for news. This is not an important news event. It'll basically push price. It'll add volume to the current direction of price for today. It'll add more volume to that direction. That's all it'll do. It's not going to reverse price. Okay. So it's our job to figure out, to weigh, to look at the chart and to take a calculated guess on where the direction for the session is today, right? There are no certainties in trading, as I always say, so there are no guarantees. All we can do is we can stack the odds in our favor and take a calculated guess of what the direction for the session might be. Okay, so let's start with the daily. Now, let's go one time frame up. Let's go to the weekly, right? Now, the previous weekly closed above 2979, tapped 3000, and this weekly candle. So today is Thursday. We've got another day left for the week to end, and we've already moved 759 pips, and the weekly candle has no bottom wick, right? So on Monday when price opened, it opened without creating a bottom wick and push straight up during the week and tap 3050, right? So from 2979, we've basically moved about 700 pips and tapped 3050. Now we've tapped 3050 yesterday during the FOMC meeting minutes, and then we rejected, right? So we're going to go down now to lower time frames. Now on the weekly, that's all we see. We see that we're very bullish on the weekly, that price has pushed up above the previous weekly high and tapped 3050. That's all the information that we have based off the weekly time frame, right? But as we go down time frames, we get more candles, and with more candles come more information. Okay, so let's go down to the daily time frame. We can see that price is rejecting 3050. Now we've broken the daily candle has broken the previous day high, but opened below 3050. The open was below, not above. The open was below 3050. So it's a clear rejection of 3050. That's a very important thing to note, that the open was not above 3050 but was below 3050. We broke the high, we grabbed liquidity once again above the daily high, previous day's high, and from 3050, and we are moving down, we are moving bearish, right? That's on the daily time frame. It's too early for us to anticipate a end of week trade, right? So if you watched my end of month or end of the last day of the month or the last day of the week trades, I talk about if it's the last day of the month trade, if it happens to be the last day of the month and the last day of the week happen to coincide, then I have done a session or analysis where you can look for the pullback wick to create a pullback wick, right? I've done that. So it's too early for us to do that today because it's just Thursday. Tomorrow we might be able to have a look at that and see how the weekly candle is going to close, and based off that analysis, we might be able to take a trade for the session. Okay, but it's too early to do that now. So let's go to our trading chart. And before we draw zones, I always do a recap of the trade idea that I gave or trade that I took the previous day. Now, if you were here yesterday, then we took sells, right? And the reason we took sells was I had explained it. 30-minute candle, we created resistance here, and a 30-minute tradable bearish candle closed below the Asian high, and we took sells. Our stop loss was there above the liquidity candle high. Price did come. We got in somewhere here and a little bit higher, and it came to all three of our TPs. The TPs are set for the 30-30, 30-28, and 30-26. Those are the TPs, and it tapped all of them, right? Now, I said the trade for the day are buys. I didn't give out any sell ideas. I gave out a buy idea right at the end of the stream. I said wait for 30 minutes for a pullback, 30 minutes support to be created, and take the buys. And that's exactly what happened. Price pulled down, created 30-minute support here. This is a tradable 30-minute bullish candle, and 30-minute support has formed, right? And so you could have taken, when price pulled back, you could have taken the trade. The stop loss would go under the 30-minute candle low because it did not happen at a liquidity candle. It happened at the EMA. So price basically reacted to the second EMA just as we anticipated and pushed all the way up to the BRN or the psychological round number 3050, right? That's what happened. So if you waited for this candle to close, so this candle closed at 1830. Just give me a second, guys. Just give me a second. Be back in a second. Sorry about that. Kids are making a ruckus. All right. Where was I? Okay, so yeah, we made it. So the trade to take was this. After 30 minutes, support was formed. There was a tradable 30-minute bull candle that closed as well. And then you could enter however you enter, or if you want to enter the way I do, then you have to wait for this candle to close, obviously. So that's 1830 IC market server time, the candle close. Go down to the 15-minute time frame. Yeah, this would be the candle close here. And then you look at the most recent two M15 breaks. So this one, 678, 684. So this one broke this low, and this one broke this low. So you would draw the fib like this, and this would be the perfect tap at the optimal entry, 3029.7, and your stop loss would be under that at about a 30 pip stop loss, and you're anticipating price to head back to the liquidity candle. So you can get out, you can take partial positions at around 70, 80 pips, and then at the London high, which is about 155 pips, and then eventually to 3050, which is about 200 pips, right? So that would be the trade that played out exactly as we mentioned yesterday. So let's get rid of all of these and start our analysis for the day. Okay, let's start our zones. Let's get to work. Just a second. Just 1 second. Okay. Let's get all of these out of the way. Okay. So there is supply that we've formed here, right at 3050. You have a rally, two basin candles, and a drop. Now we have plenty of time. I know there's about 15 minutes to the NY Open, but we don't have to rush because we have time till 8:30 a.m. EST. Okay, because there is news today, so there's plenty of time for the analysis. So let's put the numbers here. We don't need to really go. We can go to the 1 hour, but we don't need to because it's a very obvious supply zone that's formed here right at 3050. So let's put the numbers there. 4702, 758. Okay. Now demand, we have demand that has formed right here. We have a drop, two basin candles, and a rally. Okay, we're going to take a look at this on the 1 hour time frame because price has already, I believe, gone through it. This low is 603 and this low is 577. Yeah, we've gone through that. So let's take a look at the 1 hour. Okay, so here's what we're going to have to do. We're going to have to base it off of this. Yeah, we're going to have to bring it down here. All right, because this is the on the 1 hour that that would be considered a basin candle. So your base would be a drop. These are all basin candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, and this is the rally. So whenever you are confused, right? Whenever you're struggling to draw supply demand zones in a situation like this, um, work backwards. Find the leg out first, right? So if you're looking for a demand, if you're looking for a demand zone, find the rally first. Yeah, just find the rally first, then look at the base, and then look for um, the leg in, right? So the leg in, first look for the leg out or the rally, and then the base, and either the rally or the drop, right? So because a demand zone is a drop based rally or a rally based rally, okay? So if this is your leg out and this is your leg in, then everything in between is your base, right? But the reason I'm not taking it up there is because prices come deep into it, right? So we don't need to have it up there. We can in fact bring it lower down on the 30-minute. We can bring this, yeah, I think on the 1 hour is fine. We'll just keep it at the 1 hour. We'll keep it here. I'm going to keep it here to this, all right? And to that, the bottom there. So let's put the numbers there, 274 and 319. 319, 274. Okay. And let's bring this down so we don't overlap these zones. 274. Okay, perfect. And the rest I'm just going to extend to the right. Yeah. Cover a decent area to the downside. These are zones that were drawn yesterday or the previous day. If you want to have a look at how these zones are drawn, I don't redraw all zones because they were already drawn during the stream. So if you want to have a look at how they were drawn, then watch the 30 minutes of any of my streams. The first 30 minutes is when I do my prep work, when I do the analysis. That's when I draw my zone. So if you watch the first 20 minutes or the 15 minutes, 20 minutes, that should be good enough, right? Okay, so then we have a liquidity candle that we had identified yesterday that had been tapped. I'm going to take it off for now, okay, and we're going to relook at that liquidity candle. This is a 1 hour zone. This is still a high liquidity zone because we haven't crossed the 50% mark yet. It's an 86 pip zone. We have come 41 pips. Yeah, we haven't crossed the 50% mark yet, so I'm going to still keep that label. Yeah, so these are the two new zones that we have. Let's get rid of this. And that's 4 hour supply. And this is 4 hour demand. Okay. Okay. Let's extend this to the right. That was marked yesterday, I believe. Liquidity candle. Extend this also to the right. This was probably the previous day. And I think that's good enough. We covered about 300 pips to the downside. Just to be safe, let's extend this to the right as well. These are all high liquidity zones marked previously. Okay. Right, so what do we have now? We've covered, yeah, that's a good enough area covered, about 500 pips to the downside. That's good enough. I don't think we're going to move that much today. All right, so now we have two new zones. We have a new demand zone here and a new supply zone here. Now the next thing I do is, as per this, once we identify our zones, I check to see if those zones are high liquidity zones or not, right? So that's number two. So since we are in demand, let's have a look at that area. So yes, we have supply here and we have supply here, and this move up took out this supply and this in one candle. We took out both these supply zones. There's a rally, there's a base and a drop, and then there's a rally, a base, and a drop. So there are two 1 hour supply zones that were taken out by this one move up, so making this a high liquidity zone, right? And then let's have a look at this. Yes, so we have this supply here has taken out this demand here. There's a rally, two basin candles and a rally, and that's taken out by this move down. It's taken out even this. It's taken out even this low here. So this is also a high liquidity zone, right? So the supply zone is a high liquidity zone, and so is the demand zone, right? Now the next step, let me just save this. Now the next step is to look for, if price is to push up from where we are right now, to look for a liquidity candle in here. Where is price going to push up from, right? So we have two zones here. I deleted the previous liquidity candles. So I'm going to take a look at that area again, relook at that area. But we're going to have a look at this area right now because price is pushing up. It seems like it's tapped something and it's grabbed liquidity That's an 85 pip wick, and it's pushing up. Okay, so let's have a look at this area. We're looking for the largest bull candle. So there is this, which is a 90 pip candle. There is that, which is even larger, 98 pip, but it's outside the zone. Let's look at the 30 minute. That's 56. That's 82. Let's go to the 15 minute. This is outside the zone. That's also outside the zone. 72 pips. 58. 68. Maybe you have to go down to the 5 minute. It's probably this candle right here, 75 pip candle. Yeah, on the 5 minute, this one right here. See what price has done. We've gone through it. Interesting. One second, let's take a closer look at this area. Yeah, we've gone through that liquidity candle. That is a liquidity candle, but we've gone through it. Gone through that liquidity candle. So it's 46 pips. It's not that, it's possibly this. It's on the 15 minute. 70 pip candle. 66 pips. 59. Yeah, it's got to be that one. That's too much outside the zone. This is still in. Yeah, yeah, that's the one. This 15-minute candle, because that's too much. That's outside. So price has gone, interesting. Price has gone through it, right? So very likely we're pushing down. That's, if you don't, we've already cleared the liquidity in this candle. So if price continues down, we know that we're heading further down, right? That's 647,939. 647,939. Okay, let's take a look at the zone below. We have this zone here, which we did identify. There's a 108 pip candle there. That's the one it's reacted to, in fact. This is the one price is reacted to. This one I can, right? Let's take a look at it on the 30 minute. Yeah. Yeah, that's the one. This one right here. 15 minute, 5 minute. No, this is the big bullish push up. So that's the candle. So it's a 30-minute candle. Yeah, it's a 30-minute candle. So let's put the numbers on that. 553636. 553636. Okay. Now what I'm going to do is, since price has gone through this, I'm going to delete this. Makes no sense in having that, right? Price has gone right through it. But we've grabbed liquidity, almost tapped, probably a few point, about a less than a pip, or probably about a pip away from that. It's grabbed liquidity and pushed up. So we're heading back there, and that candle has been tapped once. All right, the candle has been tapped once. It's a 90 pip candle. Let's look at the 15 minute. Maybe yeah, no, that's the candle on the 30 minute, right? So it's a 90 pip candle. We've come in 26 pips. We've not crossed the 50% mark. So this is one tap. Actually, this is the second tap. This is the first, price pushed up. This is the first tap. This is the second. I would consider this as the third tap because it's just a pip away, right? I would consider this as the third tap. So the next time price does come down, we're probably coming deeper into this. And if you don't find enough liquidity here, we're coming down to this zone. And that is another 30 pips away, right? Okay. So we have a liquidity candle here. This one has been consumed, so price has gone through that. Look at the 1 hour. Yeah, that's a wick. That's a bottom wick to be filled on the way down. All right, let's clean up the chart a bit, and then look at supply. Let's see if we have a liquidity wick. Up here, okay? So again, we go to the 1 hour time frame. There is a zone here as well. Yeah, there is a zone there, but there is no top wick on this. We could easily push up. Okay, let's. I'm going to have to mark this zone because there's a clear zone there. A drop, two basin candles, and a clean drop. Price could come deep in. Let's mark it for now. Let's mark the supply zone for now. Sorry. On the 1 hour. 640, 145. Okay, now let's have a look at this area and this area and look at liquidity candles, right? On the 1 hour, there is this liquidity grab, a big wick here. So we can't ignore that. I'm going to mark that wick out. That's what I usually do when I see a oversized wick. Got to mark it out just like we see this wick, how it had gone through the liquidity candle and then grab liquidity and push straight up, right? So let's put the let's go on the 30 minute. 30 minute is this candle, 58 pip candle on the 15 minute. Yeah, I'm going to keep it at the 30 minute candle. So that covers the entire zone, that liquidity candle. 59. No, this one right here. That's better. Yeah, that one right there. That's better. This candle, right? Yeah. Hmm. 59 pips. Let's keep that. Let's keep this one. 640069. 640069. And then here 61, sorry, 71, 83. $56, 61. Yeah, this would be better because it runs right in the middle of 3050. The psychological round number runs right in the middle of that liquidity candle. So that's better than having it up here, right? That's a bigger candle also. That's on the 50-minute time frame. That's a 60 pip candle, and this is 55. Yeah, that would be the one. So 296692. 296692. Okay. So this is the NY open. It's been about 5 minutes since the NY session is open, but we still have about 24 minutes to news, right? So we have time. I'm not going to do anything. I'm not going to look for any setups until then. We've got plenty of time. Okay. Let's take a look at this again. Yeah, I would mark this also a high liquidity zone because we took out this here. And this zone took out this low. There's a rally here. There's a demand there. There's also a drop, and there's a base-in candle there on the 30-minute. On the 15-minute, there should be a base-in candle there. Yeah. So there is demand here. There's a rally, two base-in candles and a rally that has been taken out by this move up here. So this is a high liquidity zone, and this has taken out this demand here. So that's a high liquidity zone as well. Okay, that's it. Those are the zones for the NY session today. So I'll just zoom out so that you guys can see this. This is what it looks like on the 1 hour. You can take a screenshot, update your charts if you want to. And this is what it looks like on the 4 hour, right? Okay, so the next thing we're going to do, I'll come back in a couple of minutes, and we're going to take a look at what price has done in the Asian session and the London session. And hopefully that might give us an idea of what price could do in the first couple of hours of the NY Open. Okay, so I'll be back in about 2 minutes, and we'll take a look at that again. These are my zones. I'll zoom out again. I'll leave this here on the 1 hour, and you can see the zones, right? Now, I still haven't made, I have no bias yet. I keep things very fluid, right? I'm not married to a daily bias or such. I just because I'm a session trader. So it doesn't matter what the daily bias is. The daily bias can be bullish, and I can still take a sell trade, like exactly like what happened yesterday. The daily bias was bullish, right? If you looked at the daily time frame yesterday, it was bullish, right? This was the candle that we saw. So it's bullish, and we know that we're heading to 3050. But yesterday, I had a 120 or 130 pip trade that I took of a sell. So the daily bias really doesn't matter. You got to know, you got to be able to identify liquidity and where price is right now, and if it is reacting to that liquidity, and if you see candle confirmation at that liquidity to take a trade. That's all that matters. It's not about the daily bias. You can have a daily bias, there's nothing wrong with it, but you shouldn't be married to it. If you see candles print in a certain way, you should follow what you see on the chart, not what you believe. Okay, so I'll be back in a couple of minutes, and we'll take a look at the Asian session and the London session. Okay. All right, let's go to the 15-minute time frame. Okay. Okay, that's the market open. 3048, roughly 3048.5, right? That's a market open. Okay. I'll talk through this in a second. Just let me finish this. Okay, so this is what has happened. In the Asian session, we moved 114 pips. Um, and in the London session, we moved 125, 27 pips. So roughly 115 and 125, right? Almost the same movement. So for the day, we've moved about 318 pips today. Yeah. Okay. We should be heading down. All right. So let's go through what has happened. The market opened here. We were very bullish, right? So we were very bullish coming off um, the FOMC meeting minutes in the second half of the NY session yesterday. So the market opened, so we were bullish. We tapped 3050, pulled back because that's a liquidity level. We pushed down from there yesterday about 90 pips, but we were very bullish, so we pushed back up. The market opened and continued, ranged a bit, and then continued to go up and created the Asian high. Then came down, closed below 3050, right? And then came towards the EMAs and continued the bullish move up, right? Continue the bullish move up. Now, pay attention. We created the Asian high, closed below 3050, came down, tried to come to the EMA, didn't need to because it was very bullish yesterday, continued in the Asian session, pushed up, closed above the Asian high. Once it did that, the market made a decision to close back below the Asian high, right? We closed above, immediately closed back below. This is bearish volume coming in. This is a bearish engulfing candle on the 15-minute, right? This is a clear decision to push down, a clear decision to push down, right? We closed above because we are very bullish right now, and there is no reason for price to push down. But it closed above the Asian session. We should have continued higher, or we should have retested and gone up. We should have retested the Asian high and continued higher, but we didn't. We closed below and continued down, straight down. That's bullish. That is bearish volume coming in and pushed straight to back to the Asian low. All right, pushed back. Now price has turned bearish, right? We've broken this low. You can see this candle low. We broke this low here, pushed back to 3050, created this liquidity candle on the way down, pushed back into it, grabbed liquidity from the liquidity candle, and 3050 came closed below the Asian low, continued further down, created the London low, tried to come back up, couldn't. On the way down, created another liquidity candle, a 30-minute liquidity candle right here, and it's pushed down. Now this liquidity candle hasn't been tapped yet. This liquidity candle hasn't been tapped. It was created in the London session. Yeah, it was created in the London session and it hasn't been tapped yet, right? So that's interesting. We tapped this, we haven't tapped this either. If we consider this the liquidity candle, it's 84 pips. Yeah, then it's tapped. So this is very interesting. This liquidity candle hasn't been tapped, and this candle has no top wick. This 30-minute candle has no top wick. If price is to continue down, if price is going to be bearish today in the session, if it's going to be a bearish move, then it needs to grab liquidity, and it can do that from this liquidity candle, right? Or even this, but very likely through this, because this has never been tapped. This is a fresh liquidity candle, hasn't been tapped yet, so we could get a reaction right here from this candle to push back down, right? And if you do get a reaction there, then the push down is about 150, 160 pip move down, at least a 150 pip move down, back to this liquidity candle, right? So that is the kind of move that I would want to see, and that's the kind of trade that I would want to take today. Okay, we've got another 10 minutes to news, another 10 minutes more. So, what, so let's see what we, okay, so here's what I want to see then. It's the London Asian low, close below, then London high, then low, push up. We tap the Asian low, closed below. Tap the Asian low here, grab liquidity and push down, straight down. I would want to see 30-minute resistance form, all right, to take a trade to come down. Very simple. Okay, pretty simple. Here's what I'm waiting for. This is what I'm visualizing, and this is what I'm waiting for. I want to see 30-minute resistance price to tap the liquidity candle, or at least the EMA, all right, because price is now below the EMA. So tap. So we have several areas where price can grab liquidity from. We have the EMAs. We have one here. We have the liquidity candle here. We have another EMA here. That's 3. And then above that, we have another liquidity candle, and we have the psychological round number. So that's 1, 2, 3, 4, 5 areas that price can grab liquidity and push down. So whatever price decides to do, whichever of those 5 liquidity areas price decides to tap, I want to see 30-minute resistance form and a tradable bearish 30-minute candle to close to take sells to come down. That's what I want to see. That's a trade idea, and that's what I'm waiting for. We have formed support. Yeah, we're going to be pushing up. Form support. Let's go to the 15-minute time frame. It's 14:15. Yeah, there are no buys. At least no buys for me. There are no buys because we're heading towards supply right now, just 30 pips away. So I'm going to be watching for sells. That's what I'm going to be looking to take, right? I'm going to be looking to take sells. So what I explained just now is what I'm waiting for. I'm waiting to see that 30-minute resistance to be created to take a trade to come down. So it might take some time, but that's what I'm waiting for. Yeah. So until I'm not, there are no buys for me, absolutely no buys, because um, supply is too close and price is too far away from demand, right? We've already moved. We moved 100 and yeah, we moved 120. We've moved over 100 pips right now, right? So if this happened here in NY session, I would have taken a trade. If this happened here, if you formed this 30-minute support here, like now, if you formed it like in the last 30 minutes, if you formed it, I would have taken buys for price to push up, right? But this has happened. Price has already pushed up. It's moved 120 pips, so no buys. So to take sells, I want to see 30-minute resistance form and then a trade to take sells. And we could be coming all the way down here. Yeah, back here. If we get a trade here, be coming to this low, to this at least here, to 3025, 3025, 3026. That would be the area. So that's about a 150, 160 pips, depending on how high we get the trade, right? 3025 or 3026. That's where price should come down to. If we create 30-minute resistance here, and if we get a trade above 30-minute candle, that's where it should be coming to 3025 or 3026. Okay, we got about 4 minutes. We're gonna wait. What numbers are they expecting? So so they're expecting bad numbers. They're expecting bad numbers. It's hard to tell because there is no previous news events that we can relate this unemployment to. So they're expecting bad numbers. We might get bad numbers and price might push up to grab liquidity. That's possible, right? They're expecting bad numbers. We might get bad numbers, right? Um, sorry, just a second. Yeah, so they're expecting bad numbers. We might get bad numbers and price might just push up and then grabs liquidity, creates 30-minute resistance and then pushes down. That could happen. Or we could get good numbers and push straight down. But it's unlikely that price will move down without grabbing liquidity, without creating 30-minute resistance. That's very unlikely. Price has to form structure. If it has to move down or if it has to move up, it has to create structure. It has to create support or resistance to do so. So if price has to go down, it has to create resistance, at least on the 15-minute time frame, right? For price to push down. It's not going to just drop down. And this is not an, as I said, unemployment claims is not an important news event. So it's going to, yeah. A minute and a half. A minute and a half. Okay, just over a minute more. Let's see what happens. Thirty seconds more. We're going to have a push up. Price is going to push up. Let's look at the 15-minute candles. Yeah, not much volume. 30 pip candles, not much volume. There's no volume yet. There's the NY open, NY is opened. We have two 15-minute candles that have closed, just under 30 pips. Yeah, both candles around roughly 30 pips under. So, yeah, we're pushing up. We should be pushing up. Let's see what. Yeah, so bad numbers as expected, right? Bad numbers. They were expecting 224. Those are bad numbers. It's exactly as expected. You can say. So it didn't really do much. It didn't do much because it was exactly as anticipated. So let's see. It might take time. As I said, it might take time for price to, for price to create resistance, push up, create resistance, and then continue down. Right. The area that I'm watching is this area 3041.85. 3041.85. Let's just put a marker there. Yeah, yeah. That's the area that I'm watching. 3041.85. Okay. You can see support, support, resistance, support, and then again support, and then again resistance here. Right. That's the area I'm watching, 3041.85. Let's see if we can get there, create resistance, and then push down. 1415. Yeah. This is low. 942, 936 now. Yeah, there is nothing happening right now. There is no volume. You can see, as I've always said, learn how to read volume, just like how you read candles and you read candle structure and you read candle patterns. You also have to learn to read volume, right? So volume, look at that, 30 pips, under 30 pips, 29 pips, 28 pips, right? So there's no volume yet. When you have volume, you'll see a big candle. You'll see a candle like this come in, right? 45, 50, above 45 pips, 40, 45, 50 pip candle come in. That's when you know we can anticipate. Again, there are no certainties. That doesn't mean that volume has to come in, but there is a likelihood, a, a more of a likelihood of volume coming in after a big candle than it coming in after a small body candle like this, right? So you got to read volume and anticipate it. So we're going to wait for 30-minute resistance to form, as I said, and hopefully if it forms, we're going to have a trade, and let's see if it plays out the way I visualize it. Yeah, we got 25 minutes. Price should push up, should continue to push up. Should continue to push up. Yeah, we're pushing up. We should continue to push up a bit. As I said, this liquidity candle hasn't been tapped, right? It's created. We haven't tapped. Price hasn't tapped it yet. So if it does tap it, I love seeing fresh liquidity candles, right? If it does tap it, let's see. If it grabs enough liquidity, creates 30-minute resistance, that'll be a nice trade to take down, to come down. Mhm. Pushing up very gently, very slowly. 7.5 minutes. This candle has moved about 30, almost 35 pips. So there's a little bit more volume coming in now. So let's see what happens. Okay, so there's a lot of time, So we have 7.5 minutes for the 50-minute candle to close, and 22 minutes for the 30-minute candle close. As I said, I'm waiting for 30-minute resistance to form. That's the way I trade. That doesn't mean everybody needs to trade that way, but that's the way I trade. You're free to trade however you want to, but the way I trade on the streams is the way I've always traded. So once I draw my zones, I just patiently wait for price to get to those areas and show me candle confirmation. That's all it is. That's all my plan is, right? I I um, I use the laws of supply and demand to draw zones based off the laws of supply and demand. Um, I draw zones, then I identify liquidity areas at those zones and sometimes outside those zones, because you have weekly SR levels and BRNs outside the zones. You have the EMA sometimes outside the zones. I wait at those areas for candle confirmations, right? And when I say candle confirmations, it's 90% of the time, 90 or 90, even more than 90% of the time, It's for 30 minutes support or resistance to form. If you watch my streams, you'll hear that over and over again, right? So basically, in a nutshell, the way I trade is these 5 key areas where I find liquidity on a price chart, where I identify liquidity on a price chart. At these 5 areas, I wait for candles confirmation. So basically 30 minutes support or resistance to form to take a trade. Right? Now we've already tapped, perfect tap of the liquidity candle, high 4071. Yeah, perfect tap. We've tapped it by a pip, right? Should continue higher. My eyes are on 3041.85, right? But I'm not going to place a pending order there. That's not how I trade. I wait for candle confirmation. Sometimes you can, if you place pending, you place your stop loss there, you might get a better entry, a lower risk, and you might get better RR. But that's not how I trade. I wait for candle confirmations, right? 30-minute support or resistance force. Sometimes 15-minute when we have high volume, when price is trending hard, right? When price is trending hard, if it's a strong bullish trend, let me rephrase that, not at high volume, not on days, not only on days when there is high volume, but when price is trending hard. So if there's a strong bullish move, right? Price is above the EMAs and a strong bullish move, then at those times, I might wait for 15-minute support to form and take a trade. Or if price is trending hard down, if price is very bearish and moving down, then I might wait for 15-minute resistance to form and take a trade. But that's not often. That's about 10-15% of the time. 90% of the time, I wait for 30-minute support or resistance to form to take a trade. Right? There are 2 instances for the month where I trade the 5-minute, where I wait for 5-minute support or resistance to form. And those 2 only those 2 instances, only 2. That's on CPI, that's when I'm trading CPI, and when I'm trading NFP. Those are the only 2 instances. On no other day do I trade off the 5-minute chart. Just on those 2. And the reason for that I've explained. If you watch any of my CPI streams or NFP streams, it's very clear how I trade those 2 news events. And there's a reason for that, because those news events we anticipate, there's no guarantee again, but we anticipate high volume to come in very quickly. A lot of volume in a very short time. There is a difference between a lot of volume in a long time and a lot of volume in a very short time, right? The candles look different, right? So don't confuse the 2. Those are 2 different things. A lot of volume in a very short time. You'll probably see that during NFP and CPI, right? We're still pushing up. Okay, so I'll be back because I'm waiting for 30-minute resistance to form. So I've got to wait for the 30-minute candle to close, but we're heading towards 3041.85, right? I want to see how price reacts to that price level, 3041.85. I'll be back in 5 minutes. Okay, we've tapped 3041.85. Let's see how we tapped it. Yeah, we tapped it and pushed down. Okay, let's see. Seems like price is reacting to that 3041.85. Let's see. I'm waiting for 30-minute resistance to be created. Until then, I'm not doing anything. So it's probably going to be the next candle. I've got to wait another. Got to wait for this candle to close, and then we'll have to wait. I'll have to wait for the next candle to close as well. So that'll be around the NYSE open. That's fine. I'll be here till the NYSE open today. We do have some volume coming in, pushing price up. Yeah, that's a 58 pip candle. So there is volume coming in. So the next candle could continue to push up here and react to there is no top wick on this candle. As I said, no top wick here, no top wick here, right? So we could push up to this and react somewhere here, inside here. 49, yeah. 11.5 minutes more. We've got to wait for this candle to close. We're going to see how this candle is going to close. As I said, we have 5 liquidity areas here for price to collect liquidity and push down. There is the EMA. We've pushed past it. So that's one out of the way. We're in the liquidity candle and we've tapped the second EMA, right? So that's the first, second, third. And then if you get through this, we have another liquidity candle here and we have a BRN or a big round number or a psychological round number here, right? So price, that is plenty of area for price to grab liquidity to push down. 82, yeah. Yeah, we are getting a reaction of 3041.85. Now, I might do this since we are reacting to 3041.85. If I get a 15-minute candle close below the Asian low, a 15-minute candle close here, not a doji, but a tradable 15-minute candle, bearish candle close below uh, this low. I might take sells on the pullback with stops above the liquidity candle high, right? But it has to be a tradable bearish candle close below the Asian low. Sorry, below the London low. Sorry, below the London low. This is the London low. So it has to be a tradable bearish candle close below the London low, a 15-minute candle. That is option number 2. Ideally, what I want to see is 30-minute resistance form and then a trade to come down. That's better confirmation. You might just have to wait longer, but that's always better, right? To have a little more confirmation because there isn't a lot of volume right now. So, and it's not like price is too far. Prices is very bearish. It's not. We are back at the EMAs, right? where kind of we moved down. There was a big push down, 190 pip push down, and then we retraced that entire move. So this was the London move, right? During the London session, price pushed down 190 pips. This is not at the start, but the latter half, the latter half of the London session, we pushed down, right? And then price has retraced that entire move back up. So let's wait. So either a 30-minute resistance to form and a 30-minute tradable candle to close, a bearish 30-minute tradable candle to close to take sells, or a 15-minute tradable bearish candle to close below the London low. And then take sells on the pullback to come down with stops above the liquidity candle high. And the reason it's above the liquidity candle high is because that's where price is currently reacting to, the liquidity candle. If there is no liquidity candle where price is reacting to, then you can place your stops always above the candle that created support or resistance, either the candle that created above the candle that created 30-minute resistance or below the candle that created 30-minute support, if there is no liquidity candle. Da-da-da-da-da. We're still struggling at 30.41.85. Still struggling there. And the reason I marked that level is because that's where I said this. If you were here, if you watched, that's where support is, right? Support turn resistant, resistant turn support. Look at that. 1, 2, 3, 4, 5. 5 touches. And we're reacting to that again. We're trying to push down again. Let's see how this 15-minute candle closes. This might be a wide stop loss though. Yeah. 28, 29. Push 20 pips. Just waiting. Very likely going to close a doji. The price is indecisive. It very often closes a doji. That's probably what we're going to get right here. 2.5 minutes of the candle to close, we're going to get a doji. The next one might break the high, continue higher, and then we'll have to wait for the 30-minute candle to close. That's what's very likely going to happen. If this closes a doji, if this 15-minute candle closes a doji like this, which is very likely to happen in the next couple of minutes, then the next candle is going to break this high and continue higher. And then we'll have to wait for the 30-minute candle to close to see what we can do. If it closes a bullish doji, then the next one is going to probably pull back a bit and break the high and continue higher. Then we'll have to wait. What do we have tomorrow? There's no news tomorrow because we're reaching the last week of next week is considered the last week of the month, even though there are 2 more trading days for the month in the following week. Next week will be considered the last trading day of the month, or the last trading week of the month, because that's the 4th week and there are no news events on that week. So it's going to be a quiet week. So tomorrow is probably the start of that. Yeah, next week will not have much volume because we've had 3 weeks, continuous 3 weeks of volume, right? Yeah, let's look at the weekly time frame. Yeah, so we've had the first week 725 pips. This was NFP week. NFP didn't do much. That's the reason that this candle is small, because NFP didn't have much volume. But this moved a fair amount, 1,230 pips. That was the CPI week. And this is the interest rate decision week, and we've moved another 767 pips so far. So very similar to this candle, right? Very similar. No bottom wick, no bottom wick. Let's see if this week is going to close above 3,050 or we're going to close below. If we close below, then we're very likely to next week going to push up, fill the wick, and continue higher. If we close above, then we are very likely to have a retracement back to 3,000. All right, keep that in mind. If the weekly candle closes above 3,050, we're very likely to have a retracement back to 3,000. And if we close below 3,050, we're very likely to push up, fill the wick, and continue higher. Yeah, nothing. 15-minute candle close to doji. Probably going to grab liquidity, continue higher. It's very likely what's happening. Yeah. Close to bullish doji. Should grab liquidity, continue to push higher. Right now there is nothing. There's no trade yet. I'll be here for another 30 minutes, 30 minutes. I'll be here to the NYSE open. I'll wait for the 30-minute candle to close. Let's see how this 30-minute candle is going to close, right? If this closes a doji, then that's it. There is nothing for me for the for the NY session today. Let's see how the candle closes. Depending on how the candle closes, I might be able to give a trade idea for after the NYSE open. So basically from 9:30 a.m. EST to about 11:30 a.m. EST or 12 noon EST. Um, a trade idea for those 2 hours, or 2.5 hours at most. So this candle opened with no top wick. This candle opened at 1600 hours IC market server time. Yeah, push straight down. Yeah. Yeah, we're going to go up. We're going to go up and break this wick. We just pushed this is the first candle, the opening candle just pushed straight down. Even if this candle closes below, the 15-minute candle closes below the London low, I might not take a trade here because it happened in the first minute. We pushed straight down. There was no top wick. So we're very likely going to come back up and tap that high. Okay, so it's got about 11 minutes for the 15-minute candle to close. I'll be back in a few minutes, in about 3-4 minutes, and we'll see how this 15-minute candle closes. If you have any questions related to anything that I've discussed so far, feel free to drop a message on the chat and I'll do my best to answer. Anything related to what we've discussed, yeah? Okay, I'll be back in a couple of minutes. So it's interesting that we did react to this 30.41.85. So if you did have a pending order, then price did drop beautifully. Stop loss above there. But I need confirmation. I can't just trade off uh, just a single touch like that. I need to see confirmation. I need to see some sort of a bearish candle close below, at least like I said, I was waiting for two scenarios. Either 15-minute bearish tradable candle closes below the London low for us to touch this and then close below the London low, or 30-minute resistance to form to take a trade. One of those two. So I need at least one of those two to play out for me to be able to take a trade. But just like we had marked it perfectly, it tapped and it's dropping hard now, 59 pips already. The stop loss would be there above the liquidity candle high. Yeah, we're dropping 60 pips, pushing down. We should be coming here. Okay, so in terms of areas, TP levels, let me put the TP levels here for sells. If anybody is in sells, these are areas where you want to take partial positions. Yeah, yeah. 30-30, 30-26. That's where you want to maybe take like, if you are in sales, maybe take 10% off, 10, 50, at least 20% off at 30-33. If you did take sales up here, then yeah, at around 90 pips, take 30-33, take about 20%, and take another maybe 50% off at 30-30, and then finally at 30-26. Those are your TP levels. If you are in sales already. I'm not in sales because I didn't, uh, I didn't see my criteria for taking an entry wasn't met. So yeah. All right. I'll be back in a couple of minutes. Yeah, we're almost at 30-33. It was not enough. There was no confirmation for me to take sells, but there was a very nice drop from 30-41, 30-41.85. I'd mentioned that level right at the beginning. And that's 85 pips already. Beautiful drop. 5-minute rejection. For scalpers, you don't have to wait for confirmation if you're a scalper. But then I'm not a scalper, so I'm not going to give advice on how to scalp. Okay, I'm not a scalper, so I'm not going to give advice. But these levels that I mark, the zones that I mark, these high liquidity candles, can very much and should be used for scalping as well. Absolutely should be used for scalping, because if you have a price level like that, you have a liquidity candle, you have a 5-minute candle form like that, rejecting that area, then you can scalp. But I'm not a scalper, so I'm not going to give advice on scalping. Yeah, so we tapped 30-33, we're coming down. So yeah, the moves happened. I don't think we're going to push back up. Unlikely that moves happen. Unfortunately, there was no 15-minute candle close to be able to take a trade. I wanted to see at least a 15-minute candle close below. Like I said, um, like I've been saying, I want to see at least a 15-minute candle close below the London low to take a trade to come down, but we didn't have that. Price just pushed straight down, and you can't take sells off a bullish candle. At least I don't trade that way. I don't take sells when there's a bull candle formed. Price just pushed straight down. What, 100 pips? Yeah, over 100 pips from 30.41.85. Now this candle, now we have a drop here, and price can push up now, but where would the stop loss be? The stop loss would have to be under this candle here. Because we formed 30-minute support, price pushed all the way up, came down, the 15-minute candle is about to close. This candle is pre-NY, inside the pre-NY hours, inside of 1400 hours IC market server time. This broke this low, and then this is the next candle that broke the low. So from this low to this, we can take buys. It's risky, but you can take buys. Stop loss under that, and to anticipate price to head back up. That's possible. That's possible. I might do that. I might do that. Might do that because we have 30-minute support already formed. Stop loss under here though. So it's a bit of a wide stop loss. But I might do that. Because 30-minute candle closed above the London low. This is probably a retracement because we didn't get 30-minute resistance form here. This is probably a retracement because of that. Okay, I'm going to take a buy here. I'm going to take a buy here. Stop loss under this, right? I'm taking a buy here. Stop loss under here. Let's put the numbers on this. 119.936. 936. Stop loss under here. 25.77. Yeah, so taking a buy here. I've taken one buy here. There's another one here. Stop loss is here. So this trade has about a 30 pip, 33 pip stop loss. And this one is a little wider, about 65 pips. Anticipating price to push back up. Okay. Stop loss under this 30-minute candle low. This is a counter trend trade because we are bearish right now. So this is a counter trend trade. Yeah. That's volume. 94 pips. Yeah, that's volume. Push back up to 30.41. So basically 30.40. Yeah, around 30.42. If we get there, I don't know. It's a counter trend trade. It's more riskier, a lot more riskier than a trend trade. And the only reason I took that is because this is a 4-hour demand zone. It's a high liquidity zone. We created a liquidity wick here. We broke below the liquidity candle. Remember, we had marked it at the beginning of the session. We broke below that, and we pushed up. Right? We came close to this, a pip away from this liquidity candle, and we rejected and pushed up. But I couldn't take buys because there was no M15 set up for me, because I always need to see two previous M15 low breaks. So once I saw this candle break this low, and then the one before that was this, break this low, that's also inside pre-NY hours. That's when I draw my fib and take the buy. I took buys here around the sniper entry. So aggressive stop loss would be under here. A more conservative stop loss, safer stop loss would be under the 30-minute candle, under this 30-minute candle, anticipating price to push up. And the second reason for taking buys is because we didn't create 30-minute resistance. So this is not price didn't retrace to continue down. If we did, we would have formed 30-minute resistance or 15-minute clear resistance up here and then push down, but that didn't happen. So this could be a pullback to push further up. Again, there are no guarantees. That is why we have to manage risk. Once we take a trade, we got to know how to manage risk. So how I'm going to manage risk in this trade is if price breaks this low, right, then I'll close this position. So then it'll just be about 30 pips will be the loss if we break this low, this 30-minute low right here. 2029. 2029. If you get there, yeah, then I'm going to close the trade. I have another pending order at 2029.3 roughly. But if you get there, I'm going to close this one at the top. Because once we take a trade, there is a 50% chance of it working and a 50% chance of it not working, not playing out the way. So this could be the possibility of it not working out. You got to always think like that. When you take a trade, you could be in a trade where that the probability of it having this could be the trade where the probability is that trade will not work out. So then how do you manage risk? How do you reduce your risk? Instead of taking a 60 pip loss, why not take a 30 pip loss? At a logical level. Not anywhere, but at a logical level. So we are coming down. So if you break this low, then I'm going to close this trade. And I'll also probably end the stream then, because we're getting close to the NYSE open. 29.42. That's where I'm going to get out. 29.42. 30s, 29.42 is where I'm going to get out of this trade, right? So roughly about 30, 33, 34 pips. It seems like we are coming down. Once the 15-minute candle closes below here, 6 minutes, 30.99. Yeah, it's coming down. Very close to 15, 16 pips away from 30.29.42. So this candle had no bottom wick. Price came down, tapped it beautifully. See, no bottom wick. Again, no top wick. No top wick. Price tapped it. No top wick. No top wick here. There was no top wick here, and price tapped it and pushed down. Now there is no top wick here, and there is no top wick here. Just like there was no bottom wick here, and there is no bottom wick here either. So we can come deeper, but I'm not going to hold my trade. Soon as you break this, that's it. I'm going to close because I hate drawdown. There's one thing that I hate in trading, and that's the only thing that I hate in trading, which is drawdown. I don't hold drawdown. You have to find a way, no matter what system you trade, no matter what pair instrument you trade, no matter what style you trade, if you're a day trader or a session trader or a scalper, you have to find a way to manage risk so that your losses are smaller, that they will always remain smaller than your wins, right? So even if you have a system that gives you 1 hour trades, like 1-to-1 risk to reward, find a way to manage risk. And if you do that, you'll no longer have a 1 hour system. You'll have a probably a 2 hour system if you find a way to manage risk. So even with a 1 hour system, you can be profitable if you learn how to manage risk. We're very likely pushing down. Once this candle closes bearish, the next one's going to break the low because that's a 30-minute candle close. The next one's going to pull back and close, and when I'm going to close my trade. This candle is going to close in 2 minutes. Let me repeat that. This candle is going to close in a couple of minutes, and it's going to close bearish, which means the next candle is going to break the low and continue down. There's no makes no sense in holding any buys at this point, because this candle is closing bearish. You have a bearish candle closing against you, which means the next one is going to break the low and continue down, right? So as soon as the candle closes, just close the trade. Does that make sense? I hope that was clear and that made sense. Once you take buys and you have a 30-minute bearish candle close against you, just close your trade, or close 80% of it. Yeah, we're coming down. Yeah, I'm gonna it's a lot of bearish volume. Yeah, it's time to get out of this trade. See if we can have a bit of a pullback and take like a 19-20 pip loss on it instead of a 60 pip loss. Yeah, I'm out. So I took like a 19 to 20 pip loss on that trade. No pending orders. I closed my pending orders because it makes no sense. You got a 30-minute bearish candle close there, right? You got to see some sort of support form to take buys again. This makes no sense now. You got a bearish candle close means price is heading down, right? The next one is very likely going to break this low and push further. The possibility of that happening is now higher. That's what it means, right? I've said this many times in the stream. When you have, if you're in buys, you're expecting or anticipating price to create higher highs and higher lows and push further up, okay, so that you're in profit and you can have a profitable day. But when you have a 30-minute bearish candle close against you, you no longer have higher highs and high lows. Now you have a lower high and a lower low, right? And that's exactly what this is. You have a lower high and a lower low, right? So it's more likely that the next candle will also have a lower high and a lower low. It's not certain, but it's more likely. Just like you have a higher high, a higher low followed up by a higher high, a higher low, and a higher high and a higher low, right? You see, this low is higher than this low, and this high is higher than this high, and this high is higher than this high, and this low is higher than this low, and the same goes for this, right? Just like that, there is a possibility now, once you have a lower high and a lower low, that the next candle also might create a lower high and a lower low. Right? You might have a pullback, but you might continue down. Okay, so there is now the possibility of price going in your direction is cut by half. Right? Soon as you have, so if you're in sells and you have a 30-minute bull candle close against you, right? Which means now you are in sells, you were expecting to see lower highs and lower lows, but now you have a higher low and a higher high because you have a 30-minute bull candle close against you, right? So now the possibility of price going in your direction is cut by half, right? Does that make sense? It's cut by half. So you need to also cut your position. Either you take off the entire position off the table, or you take off at least 70-75% of your position off the table, right? Because now the possibility of price going against you is higher than going in your direction. That going, the possibility of price going in your favor is lower, and the possibility of price going in against you is higher, right? And that's exactly what I did. You got to so the risk was based off, let's say, I planned it at about, let's say, about a 60 pip. I closed at 19 pips. Now price is, going in my favor, but that doesn't matter. I don't know that for sure. I don't know that that's going to happen for sure. It could have easily broken the low and continued lower, right? If I held my trade, I would have been in profit, right? But I can't make decisions based off assumptions. I can make decisions based off um, logical price action, right? Of candle structure. I can make decisions based off that. I can manage risk based off price action. So as soon as I see a lower high and a lower low, I have to anticipate that the next candle also can create a lower low and a lower high. Now, it can create the lower high first and then create the lower low, or it can create the lower low first and then go up and create the lower high. We don't know which will happen first, but it's always better to manage risk, right? To once you take a look at the chart and you kind of, you see that price is now in drawdown or going against you, just cut at least 30, 40, 50% of your position. Okay, so that's it. I'm not going to be taking any trades today. That was the only trade. Now, price is ranging. To be honest, price is ranging right now. I wouldn't. Price is ranging. Let's look at the daily. Yeah, we're ranging. We're very likely to close a, a doji here, right? So because we've come down, we've pushed back up, we've come down, trying to push back up. So I wouldn't take any trades today. I would just wait for tomorrow, right? I would wait for tomorrow. Um, the only trade, the only trade that I would give out as an idea today is wait for sells, to wait for third, because price is trending down. We have somewhat a bearish move down. We've created a new low in the London session, or just before pre-NY. So wait for price to pull back up, create 30-minute resistance, and then look for a trade to come down. That would be the only trade idea. But it would be better not to take any trades today, because I think we're going to have a doji today. We've rejected 3050. The candle has broken the previous day high, opened below 3050, trying to push down, but there is no bearish volume to push down. If there was bearish volume, we would have continued straight down. We would have created 30-minute resistance here, or 15-minute. A bearish candle would have closed below the London low and continued straight down all the way down here. But there is very little bearish volume, so that's why we're trying to push back up. So don't get caught in a range, right? In this price pushing down, price pushing back up. Don't get caught in this range. Wait for a clear direction. So it's basically what I mean is wait for price to come into a liquidity area, right? Either the liquidity candle, back to the liquidity candle, or this liquidity candle, or the BRN, and create 30-minute resistance, and then take a trade to come down. Now again, if you are taking sells, if you're creating 30-minute resistance, it has to be 30-minute resistance has to be created, and you need to see a 30-minute bearish tradable candle to close. You've got to wait for that and then take the trade, right? So I took a trade here and I managed risk beautifully. So instead of losing 60 pips, I lost like less than, I think, about 20 or less than 20 pips. Yeah, just 20 pips. That's all I lost. So, so on days like yesterday where I had like a 120 or 130 pip move yesterday, on a losing day, I lost just 20 pips. That's the game, right? You got to, just by managing risk, you can make a 1 hour system be immensely profitable just by managing risk. But you got to manage risk in a very logical fashion. You can't just randomly close trades whenever you feel like it. So this was based off, once we had a 30-minute candle close, there was no reason for me to hold these trades because price could have easily broken the low and continued down. It didn't. It's pushing back up. But I don't know that, right? I don't know that for sure. All right. See you guys tomorrow, 7:30 a.m. EST. Uh, I'll be back. We'll do our prep work and then see if we have a trade in the first 2 hours of the NY Open. All right. Take care. Have a great evening.